What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. In this video, I want to go ahead and share with you guys how exactly I go about picking stocks. I do use a checklist. I'm going to go through the 8 things that I go ahead and focus on every single time I'm doing research on a dividend-based stock that I want to go ahead and add into my portfolio. Now, here we go, guys. My portfolio is currently sitting at $119,000. I call this my bucket list portfolio. It is up $1,880. Right now, the Dow Jones is hitting all-time new highs. Just in the last week, we've hit brand new highs, 52-week highs of $34,035 in the Dow Jones. So if you are investing like me in the stock market, I'm going to share with you guys exactly how I go about picking dividend-based stocks. And I love investing in dividend stocks because you are making passive income along the way while you're waiting for these stocks to potentially go ahead and maybe grow over time. But the best thing about it is really just that cash flow, because you're getting these dividends paid back to you in a bit safer companies that have the potential to go ahead and grow. Now, just to share with you guys where this portfolio has started, we did start this portfolio off about a year ago, but just in the last week, guys, the portfolio is up about $3,119 or 2.71%. In the last month, the portfolio is up $4,412 or about 4%. Last quarter, the portfolio is still down about $138 or 0.13%. And here we go, guys. All time, the portfolio is up $15,141 or about 26%. This is the highest this portfolio has ever hit. My goal with this portfolio is to get it to about $250,000 in overall value by the end of the year. So we'll see if we get to that. My goal last year was to get this portfolio to 100,000, and I was just short. I believe I was at like 92,000. So we'll see if we hit that. But at the same time, consistently investing in this portfolio and reinvesting those dividends is how I see this portfolio hitting above 250,000. Now, the nice thing here is that the earned dividends and the market gains. This is really the main focus of this portfolio, is to go ahead and earn me dividends every single month and every single quarter. Plus, I want these stocks to also grow over time. So I'm going to share with you guys exactly how I go about picking these stocks that I have in this portfolio. But I've earned a total dividends of $1,450 or $52. And then the market gain, I've had total market gain of $13,689. And just in the last day, the market's been really nice to us. So the portfolio is up nicely just in the last day. But guys, I have the portfolio broken up into different sectors within the S&P 500, plus I have a growth pie with all my growth stocks. Now, all these other pies are my dividend pies, so I do like to go ahead and break the portfolio up and be diversified in the different sectors within the S&P 500. And if you want to see all my different stocks that I have, I always provide a link in my description, so you guys can go ahead and check that out. And if you have any comments, just let me know in the comments down below. But let's go ahead, jump into it. I'm going to go ahead and break this down into a checklist format. And basically, guys, we are going to go ahead and look at the 8 different things that I like to go ahead and focus on. But before we can even start doing research on the particular stock, we need to go ahead and choose what type of stock that we want to go ahead and invest in. And some of the sources that I like to go ahead and use is there's a list called a Dividend Aristocrat list, and there's Dividend Kings. Now, if you just do a Google search, there's many different ways to go ahead and find out which stocks are considered dividend aristocrats and which stocks are considered dividend kings. So I'll share with you guys 2 different sources, but the one source is going to be on Simply Safe Dividends. Dividend aristocrats are basically stocks that have consistently paying out their dividends for the last 25 years. If you're researching stocks to go ahead and invest in and you want to focus on a bit safer stocks, dividend aristocrats are, in my opinion, one of the safest ways to go, because these stocks have been paying out dividends for the last 25 years. Now, there's many different names in regards to some of these stocks, and some of these stocks are going to be very seasoned names in the industry. And what I really like about looking at this list is that there's different stocks within all the different sectors. We have stocks in the energy sector, consumer discretionary, consumer staples. I mean, some of the names that just stick out is like Target, McDonald's, Walgreens, consumer staple stocks, Hormel Foods, Cisco, Procter & Gamble, industrial stocks, 3M Company, Caterpillar, and then there's financials like Aflac, T. Rowe Price, real estate stocks like Federal Realty Investment Trust, healthcare stocks like Medtronic, basic materials, technology, and utilities. So as you guys can tell, there's a lot of different stocks that are considered dividend aristocrats, and this is one place to go ahead and just start. And I'll share with you guys some examples as we go ahead and go through this. But the other way that I like to go ahead and look at finding stocks is looking at dividend kings. Now here's another resource as well, and this is going to be a Seeking Alpha, but basically if you just type it in, you can go ahead and see some of the different dividend kings out there. Now dividend kings are stocks that have been consistently paying dividends and have been growing their dividends for the last 50 years. So these stocks are actually a bit safer. So these are even safer companies than dividend aristocrats. And same thing, guys, there's stocks in here broken up into each sector that are considered dividend kings. So there's basic material stocks, there's consumer defense, consumer cyclicals, and some of the names that stick out is like Altura Group, Procter & Gamble, Cisco. There's financial services stocks, there's healthcare stocks. So there's a lot of different stocks within this sector as well. There's utilities. I mean, the list is pretty nice. So this is one way to just go ahead and find a stock that you want to go ahead and invest with that pays out a bit safer of a dividend. So this is the first place I like to go ahead and start to go ahead and give me some ideas. Now, a lot of these stocks I do own in my portfolio. For example, AT&T is a stock that I have in my portfolio that does pay out a very nice dividend. But just jumping to the checklist here. So once we went ahead and let's say we found a stock that we want to go ahead and do research on. And the first thing that I like to go ahead and look at is the price growth of that company. Is the stock actually growing or is it just trading sideways? So for this example, I have two different examples that I want to go ahead and share with you guys, but the first one is going to be with a stock like a Costco. Now, Costco is a company that I like to go ahead and invest in. This is a company I truly believe in. I believe they have one of the strongest ecosystems when it comes down to their sector. They have a huge following. Everybody loves Costco. I love going to Costco. They're price competitive. They have great products. So that's a little bit about Costco, but the first thing I like to look at is the company growing? I like to go ahead and look at their 1-year chart and their 5-year chart. So basically, a website I like to go ahead and use is Seeking Alpha. Now, 1 year, if we look at Costco, they've been growing by 18%. My rule of thumb is I want to see a company at least grow by 10% every single year. And then overall 5 years, I want to see a company grow by at least 50%. So in this case, this is a really, really nice chart. I like to see something that's consistently growing over time. So 1 year and 5 years, this company is growing. 1 year, they were growing by 18%. 5 years, they've actually grown by 140%. So that's over 100% return, which is extremely nice. This is exactly what I like to go ahead and see. And another company that we can also go ahead and compare this to is Walt Disney. Walt Disney, I'm a huge believer in this company as well. This company, over the last 1 year, is actually grown by 79%. And then overall, by the last 5 years, they've grown by 88%. So they've hit both thresholds there as well. So I like to follow the checklist format. So both of these companies actually went ahead and hit that mark. Now next, I like to go ahead and focus on the safety rating of this company. So Simply Safe Dividend actually does a really good job by providing the safety rank of the dividend of that particular company. So if we go ahead and go to Simply Safe Dividends, I love this site, guys. Just as a heads up, Simply Safe Dividends is a great site if you're focused on setting up an account that pays out dividends, or setting up like a retirement account where you're just allocating dividends and reinvesting dividends and just focusing on creating a portfolio that's purely focused around dividend and dividend growth. So they do have a fee. I'm not an affiliate with Simply Safe Dividends, but I really do like what this company does and some of the research that this company has. So I have updated my portfolio. I actually need to do another update on here, but let me just show you guys exactly what I'm talking about here. With Costco, when we go ahead and go to Simply Safe Dividends and just search for a particular company, in this case, we're going to look at Costco and we're going to look at Walt Disney. Costco's safety score is a 99. That's a really good safety score. I like to look at companies that have a safety score of above an 80. Anything above an 80 is considered safe. So this company fits that criteria. And with Costco, being that they're 99, this is considered the safest score that you can actually have. Now, the other one, just to compare this to, is going to be Walt Disney. Now, here's the thing. With Walt Disney, they actually stopped paying out their dividend because of the pandemic. So they are not currently paying a dividend, but this to me is still a very strong company to invest in that I believe will go ahead and return their dividend. So I still do carry this in my dividend-based portfolio. But in this case, they actually stopped paying their dividend. But I do believe that later this year, Disney will go ahead and relaunch their dividend, because prior to this, they were consistently a dividend paying company and they were growing their dividend, but they stopped paying it more recently. So that's the next thing that I like to go ahead and look at. So just to follow up with that, the next thing that I like to go ahead and look at is the dividend streak. How long has this company actually been paying their dividends? Now, personally, I like to see something that's at least been paying their dividends for the last 10 years. If they've been paying their dividend longer than that, that's awesome, but at least 10 years. But dividend aristocrats, as we know, have been paying their dividends for the last 25 years, and kings have been paying their dividends for the last 50 years. So for this example, let's go ahead and look back at Costco. Now, Costco is a company that has been consistently paying their dividend, and we can actually go ahead, and there's a couple different spots to go ahead and look at this, but one is going to be under Simply Safe Dividends. If we go ahead and look at the dividend growth, Costco has actually been growing their dividend for the last 16 years, and they've been consistently paying their dividend for the last 16 years. Now, the other place that we can also look at this is going to be on Seeking Alpha. And under Seeking Alpha, let me just make sure, but I believe, yep, you go right under dividends. And once you go under dividends, there's a dividend summary here. And under the dividend summary, you can actually see the dividend growth. They've been growing their dividends for the last 16 years. So that's a really good sign. And it also tells us that this company pays their dividends on a quarterly basis. I really like that. That's exactly what I try to look for when I'm looking at a company that is a bit safer, that I want to invest in for the long haul. And this is going to kind of take us into the next item on the checklist, which is going to be the dividend yield and growth rate. Basically, the next thing that I want to see is, as long as the company has been consistently paying their dividends for at least 10 years, I want to go ahead and make sure that this company is paying a decent yield and that they've been growing their dividends consistently as well. Now, a nice yield is obviously, the higher the yield, the more attractive it is, but the riskier it is. So if we look at a company like AT&T, AT&T is actually paying a dividend yield of 6.99%, which is extremely nice. But if we look at their growth rate, they've only been growing their dividend by 1.83%, so not even 2%. So the dividend yield is really nice here, but the growth rate is a bit lower. I would rather have a higher growth rate if I'm looking at investing in this company for at least 20 years. But if you're retiring less than 20 years, then I would rather have a higher dividend yield. The dividend yield is obviously nice because it's more cash flow that you're getting from investing in this company. But if you're really looking to go ahead and use that compound effect and let that compound effect take over, it's better to have a higher growth rate. So if we look at this company on Seeking Alpha, we can tell that with this company, they've been paying a dividend yield of 6.99%. And then if we go ahead and look at their growth rate, it's telling us last year this company didn't even grow by 1%. Last 5 years they've been growing by 2%, and then last 20 years this company's dividend has been growing by 4%. Now, comparing this to Costco, Costco's currently paying a dividend yield of 0.76%, so a lower yield. But if we look at the growth rate, they've been growing their dividends by 11.84% over the last 5 years. So I like the dividend growth rate here, even though the dividend yield is lower. But again, there is a mix there. I like to go ahead and focus on both of these items when I'm investing. And in this case, both of these companies I do invest in my portfolio. So here, if we go ahead and look at Simply Safe Dividends, it's going to show us that the dividend yield is 0.86%, but the dividend growth on this company is just a lot nicer. Now, in my case, I'm basically looking to hold on to this portfolio for at least the next 30 years. So I'm okay with a lower dividend. I'd rather focus and weigh in a little bit heavier on the dividend growth. This company grew their dividend by 13%. In the last 5 years, they've been growing their dividends by an average of 12%, and then overall in the last 10 years, they've been growing their dividends by an average of 13%. And if we just look here, guys, this is actually considered very fast as a dividend growth rate. So I really like that about Costco as opposed to AT&T. So this is the fourth thing that I like to go ahead and look at. Now next, let's go ahead and look at the next item that I like to go ahead and check off on this checklist. And that's going to be the stock price trend. Basically, with the stock price, I want to go ahead and see the stock price going up over the last 5 years at least. So if we go ahead and look at a company like Costco, Costco actually fits that really, really well. Where the last 5 years, this is exactly the type of trend that I like to go ahead and see. But at the same time, I like to go ahead and look at what exactly is the stock price trading at. Can I afford $368 a share, and how many shares can I really afford at that price? So I like to go ahead and look at the stock price and make sure that the trend over the last 5 years and the last 10 years is going up. Now, if we look at another company like an AT&T, with AT&T, the story is going to be a little bit different here, where the stock has actually been trading sideways or down. So in AT&T, yes, I can afford this stock price at $29.75. But if we go ahead and look at the trend, overall in the last 5 years, this company is actually down. They're down about 22.69%. So that's where you got to really weigh in. Is the dividend yield worth the risk of losing money in the growth of the company and as far as the overall funds that you have invested? In the last 10 years, you would basically have the same amount. You'd be down about 3%. So given inflation, is it worth really investing in this company from a growth perspective? Now, in my case, I would probably say yes, it is still worth it because you're getting a dividend yield of 7%. And inflation, given that even if it's at 2 or 3%, you're still making out over the long term. So that's the next thing that I like to go ahead and look at. Now, guys, the next item on this list is actually gonna be the revenue and net income. I like to go ahead and make sure that the company's actually making money and that I am seeing an incline in the net income, meaning this company is making more and more money every single year. So I want to go ahead and look at Costco here first. Now with Costco, I like to go ahead and look at the income statement and basically look at a couple things here. I like to go ahead and look at the gross profits, as well as I like to go ahead and look at the net income. So those are the two things that I really like to focus on with doing a financial dive on the company. So if we go ahead and look at the gross profits, every single year since 2016, this company has been growing their profits. And that, I believe, is a very good sign. This is exactly what I like to go ahead and see, is a company that's actually growing their profits. Now, the net income is going to be basically taking into consideration all the operating expenses. If the company is growing, what they're doing as far as their expansion, but are they actually making money? Bottom line. So bottom line, I like to go ahead and see the company actually making money as well. And in this case, if we look at from 2016 up till now, every single year, this company's actually got more net income coming in. So this company is headed in the right direction. Now let's go ahead and compare this to a company like AT&T. Now in AT&T's case, gross profits from 2016 up till now, they were actually going up and down a little bit here. They were at 86, then 82, then 91, then 97, and then 91. Here's the thing. With AT&T, they've really tried to diversify their business, and they've had some bad acquisitions. They actually had acquired DirecTV, which was not a good acquisition for them. So this company, while they're trying to go ahead and grow their gross profits, they've taken a bit of a hit as far as through their acquisitions, and with some other competitors coming into their market, their gross profits have gone down. So if we go ahead and look at the net income, their net income in this case, I know is going to be lower because of some of the investments that they've tried to make that have just not paid out. So if we look at the net income in 2016, they went from 12 to 29, which is awesome, then back down to 19, then down to 13, and then last year they were actually negative 5. So here's the thing. That's why this company is trading down right now, because they're actually not making money. They're actually losing money. However, they have a lot of cash flow still coming in from their wireless business, and they're in talks to go ahead and get rid of some of their bad debt, like their acquisition for DirecTV. So that's obviously a bit of a concern when you look at a company like AT&T, and that's why when you're paying for a company that's paying you out a higher dividend, Is it always good to have a higher dividend, or is it good to have some safety with a lower dividend but a company that's actually growing over time? So in this case, Costco is obviously fitting that bucket a lot better. And now if we go ahead and look at the next thing that I like to go ahead and look at, and the 7th rule on this checklist is going to be the 30-year hold rule. Basically, in this case, the way I like to look at it is, if I'm planning to go ahead and retire in 30 years, do I want to go ahead and hold on to this company for 30 years? Do I see this company growing? Do I see this company cutting their dividends? Do I see their dividend growing over time? Do I see the dividend compounding over time? Where exactly do I see this company in 30 years from now? And at that point, guys, I just like to close my eyes and just imagine this company, and imagine, will this company be around? Where will this company be in 30 years from now? Will they be growing? Will they be at the same spot? And really just think through if I want to go ahead and hold on to this company for 30 years. A lot of times there's a company that I'm really attracted to, but at the same time, if I don't see holding that company for 30 years, it's not a good investment for my portfolio. So I like to go ahead and hold off on investing in a particular company. Once I do my research, I like to sit on that company, write it down, sit on it, really think through if this is going to be a long-term company. And usually I like to sit on it for about 3 to 5 days. And sometimes I've taken at least a week to sit on it. And then I'll go ahead and put a little bit of money and then just dollar cost average into that company as I get more and more conviction in that company, and making sure that this is a company that I want to really hold on to for 30 years. So in this case, with some of the companies that we've talked about, with Costco, yes, I see holding on to this company for 30 years. I think this company is actually going to be way better in 30 years, and their stock price is going to be higher, and with the compound effect with their dividend, it's going to be higher. And now, guys, finally, the last item here on this checklist is going to be, do I know this company's product or do I use their product? I personally do not like investing in companies that I do not know anything about, and I haven't done a deep dive into that company, or I just don't use their product, because at the end of the day, it's just hard for me to keep up with that company and keep up with what they do on a day-to-day basis. So I really like to focus on companies that I can fully just understand and just keep up with. For example, AT&T is my wireless provider. So anytime they have a price increase, I'll get notified because my bill's gonna go up. Anytime they have a price decrease, anytime they're doing any kind of promotions, when I'm going into their store, I know what to look out for. I know that, hey, yes, this is still a company that's going to be around because I'm one of their users. Same thing with Costco. With Costco, their price competitiveness, they're expanding. They just expanded and actually built another store in my area. So this company is really growing at the same time. So I use their products. I like to go ahead and go into their stores. And then the other one with Walt Disney. I mean, with this company, they have a very strong ecosystem as well, with all their Disney characters, with their streaming services, with their cruise lines, with their theme parks. I mean, I have 2 little kids and I know we're going to be going on Disney trips. So this is a company that I can follow on a year-to-year basis or month-to-month basis because I use their products, or I know this company and exactly how they go about making money. But guys, these are basically going to be all the different rules I like to go ahead and follow. Now, I like this checklist type of strategy because this is a way that keeps me disciplined. I like to go ahead and make sure any type of stock that I'm investing in is at least hitting 6 out of the 8 of these items on this checklist. So hopefully this video was informative. These are all the different things that I like to go ahead and look at when I'm actually picking a stock to go ahead and add in my portfolio, and in particular when I'm picking a dividend based stock. So hopefully you guys enjoyed this video. If you did, guys, don't forget to smash that like button, as that's all I ask, and it really helps me out and helps the channel out. And if you want to go ahead and follow me on this journey, guys, the portfolio is currently sitting at all-time new highs at 119,000. Don't forget to subscribe to the channel down below. If you are interested in investing, I do got to toss it out there because it's my favorite platform out of all the platforms out there. M1 Finance is currently actually offering $30 as a limited time offer if you go ahead and sign up with them. It is an affiliate link, so it does help the channel out, but I will leave a link down in the description if you want to go ahead and check that out. But thanks again, guys, for watching. Until next time, I'll see you guys at the next one.